Welcome everyone. How we doing? How's everyone doing? We have a good day today. Doing good. Good day for me too. It's a easy dip by to buy this morning. Welcome everyone. How's it going? We'll give it a few minutes here to let some people show up. Shanks, how you doing? Sunny, love to hear it. Tony, love to hear it. Good day for me. Couple of trades and then just did some work around the house. Nice and casual. They'll still give it a couple of minutes. How'd everybody's day go today? Hope we all had a good one. It's a pretty fun day. You were on the right side of it, I reckon. Nice, Ralph. Yeah, I hope everybody had a good one. Was a little quiet in the group today. You never know if that's a good or a bad thing. If people swung stuff and made money or what happened. Sometimes when it's quiet, that speaks volumes to how people are doing. Who took the midterm today? Yeah, been a while since I've had to take one of those, thankfully. Nice. Well, those are all much better reasons to be not trading today instead of, blew up or whatever, except maybe the midterm. Rudy, how you doing? Haven't seen your name pop up in chat in a while. Hope you're doing good. Been doing good. Doing good. Things been good for me. Okay, and I think we will just about get to rolling here. Just doing a couple things real quick. Okay, welcome everybody. Thanks for being here, Dirty River. Uh we're going to be talking long time frame analysis today, which sometimes, that can be taken in a few different ways. And people might understand what use it has to them. But in my opinion, and people have, heard me preaching it in my lectures forever, you should start the day on that daily time frame, and just see where the market is trading. Like we had a couple of nice down red days the last couple of days. And then, I mean, going into the CPI print, granted, you don't necessarily want to be swinging into something like that because, you turn a trade into a gamble real quick, swinging over data like that. But there is a lot of reasons to be looking long in the market more than short in the market. I know that everybody, here's a couple prime examples. People see a couple red candles like this and they flip bearish for whatever reason, ignoring that this is what's going on in the large picture. So today was just a, really nice dip buy opportunity. That CPI print came in, I mean, slightly above estimates. It's kind of to be expected. I'd been mentioning that I was expecting it to come in a bit hot. I know Talia had mentioned it. Some of those people who actually pay attention to the economic stuff, Rev and everybody, I'm pretty sure we were all pretty confident that we were going to get a slightly hot read. 0.1 increase, nothing to be concerned with. We saw that in the market today, that the market did not, the market did not, care about that hot print at all. In fact, they showed up and they just hammered that buy button for, not only at one wick down off of the print, but then they basically hammered that buy button for the rest of the day. Bit of selling into the bond auction, obviously, small sell after the bond auction. But then obviously those sellers were absorbed very quickly, went right back into buy mode. And so the long time frame is really where, you can start to look at things and say, hey, do I want to be short? Do I want to be long here? And so we're going to talk about just a few things that you can look for on those longer time frames, to kind of have an idea of, where the market might be heading. And then how can we use it in our actual, day-to-day trading? Obviously, if you're a swing trader and you aren't spending most of your time on that daily time frame, 4-hour time frame, then I think that you should probably do a little bit of adjustment to your trade planning. I don't I'm not a huge fan of basing your swings off hourly charts or anything like that. There's just, you can miss the big picture when you get down to to me, an hourly time frame is relatively short, obviously not a 5 minute. So today we're really talking, that 4 hour and daily analysis to say, what can I do intraday trading, And so we're going to start and with just some things that I look for anybody who was in, well, basically any of my support and resistance lectures, any of my Q&As, any of my EMA lectures or EMA/SMA lectures. You guys know that I love the SMAs on a daily time frame, weekly time frame as well. So what we're looking at here is just three simple SMAs. We got the 20, we got the 50, we got the 200. So no questions asked. They're all pointed up. If you zoom out, if you're bearish on this chart, I just don't know what to tell you. You're missing something pretty big. Feel free to DM me. So if you're bearish on this chart, let's talk. Otherwise, look at these SMAs. All pointed up. Everything's pointed up. Bulls are in complete control. Bulls have been in complete control for basically a year and a half now. They've just been slaughtering the bears. And so what can we see from this? What do we see on this daily time frame? And that this is obviously tech. And so I've been liking using this 20 SMA on tech. Tech has been obviously the much stronger sector. I mean, I can't really say stronger than SPY, but like tech has just been on the run of the lifetime. The amount of volume in tech trading is higher than most other sectors in the market. We're not only seeing it in shares, but we are also seeing it in just the open interest on contracts. Some of those things that are great to trade, the XLEs, the XLF, there's just not, you know, very good liquidity in those contracts right now, not nearly as much as there used to be. So we know that the market is still obviously focused on tech. So I've been starting basically every single day looking at basically this daily chart. Obviously I have my trends up, the ones that I just deleted, but looking at this daily chart. And as we can see, since basically that October going into November low, the 20 SMA has been it. If we're having any sort of pullback, we're getting within a buck or two of this thing. I'm starting to look to buy dips. And today, obviously, prime example. I mean, we had it at 436.65. If we go in, I don't know what the low of day was, but it was 436.46. So basically bottom ticked it today. And that was something that, I saw that CPI print. I assumed that the market might sell just a little bit on it. It wasn't quite, I expected a slightly larger bump on it than we got. No big deal though. Saw that small increase, saw a little bit of sell in the morning. We saw, quick sell in the morning. I had swung a couple of puts, cashed them for a loss down here. But then assumed, hey, we should start looking long at this point. So that is what I've been really, really liking on tech lately is just, I mean, and you don't even need the 200, obviously, just get this 20 SMA up there and kind of trade around it and start to, look at these daily time frames. And if we are trading anywhere down, near this line, and don't get me wrong, have we broken it a couple of times and you would have got stopped out? Sure. Without a doubt. But we can see for right now, the market has exactly zero interest in it being, tech being under that 20 SMA. So obviously still kind of in dip buy mode on tech. But then what else do we want to look at when we're looking at these longer time frame charts? And again, as all of you know, I'm kind of playing these last, and I've been doing a bunch of lectures a week lately. I'm trying to get everything that I look at, start to finish, how do I do things laid out so that I'll be able to pin all this in my tab. It's probably going to end up being maybe 10 lectures or something like that, but it is a start to finish of how do I trade. And so, we've done support resistance, we've done trends. So obviously when we have something like this going on, one of the main things we want to look for, any sort of major trend, whether it's that trend or if you had this one drawn previously, from this low to this low, doesn't matter which one you're looking at. We'll just leave that one on for now. And then, so you always want to be aware of trends. The other trend that we have working is obviously this top side trend up here, and we're seeing some we're seeing some coiling here. Finally in the market, doesn't make me bearish, doesn't make me overly bullish. But we're getting a nice little range to trade off of these last, 10 trading days, 15 trading days, whatever this is. So we have our trends on the daily time frame. What else do we want to look at? We want to look at dramatic highs. Obviously, this is all-time high. And then we want to look at dramatic lows. We had big bounce down here, big bounce previously, bounce, rejection, attempted breakover. We know this 433 pretty dang important. If we're starting to get down to this 20 SMA, down to this 433 area, you want to be looking long. If the market starts pushing up to here, pushing back towards those all-time highs, 448, 447 to 449 area, you want to start treading lighter and lighter on shorts. Obviously, there is times where we're just going to blow out and we're just going to rip. We've done it. We've done it. We've had plenty of blowouts so far this year where we have just continued to push. But as you get up here, you can start to look for more of a technical short. This isn't based on feelings. This isn't because you think the Fed's idiots. This isn't any of that. This is just a nice risk reward trade of where you might want to be looking short in the tech market. And we're just looking at this from the daily time frame. We know we get up here to 447. If you want to, even all the way up to 448, you want to start looking to short it. The closer we get to that all-time high and the closer we get up there, then you can look to be short with stops above. This is the type of trade where you, of course, if you're wrong, you guys all know me. If you're wrong, admit it fast, stop out and move on. So if you're shorting up here, you can look to really reduce your risk the closer we can get to all-time highs with a stop above all-time high. If we get a break and retest, you can look to long it. On the opposite end of that, we start getting down to this 20 SMA, getting down to this 433, 434 area. You want to be looking long down here. For the exact same reasons you want to be looking short up here. When you're down here and you're looking long, then your stop is tight. So the closer you can get to these support levels is where you want to start looking at calls. And so we can see right now in the market, if people want, because everybody knows I'm a big range trader. I love ranges. I love trading in ranges. This is technically speaking our range. We had that one push out to all-time highs, but I'm more concerned with these tops right here. We're sitting pretty dead center of the range right now. Holding above that 440, obviously going to be a big psychological thing. If I'm trading tomorrow, any pullbacks down to 440, I'm looking to buy. Any breaks above, this 448, these all-time high areas, I'm looking to long it. Up to here, short, down to here, long. Very, very cut and dry. Of course, this doesn't give us a ton of information right here. So there is trades throughout the day, obviously, that come, not based on these daily levels. One thing that I'm always going to kind of look for is I'm always interested in something of a midpoint of the range. We can see it's basically 440. It was tough before, had a break, failure. So 440 has been a crucial one so far. Look to buy those dips to there, shorted under it, or play bounces off of it to the upside. And so that's what, we just have a few levels on here. There will obviously be intraday levels, but if you go into, and we'll remove the gray box just so we can see a little bit better. If you go into these shorter time frames, you can start to see your levels work, 440, 64 stops below 440. That's a very, very reasonable trade if you're trying to buy the pullback. If you're trying to short it, obviously stops on a break above it. But this is where all of my levels come from. All of it, sometimes I'll draw a trend on the 4-hour for slightly more accuracy, but this is where all of my levels, where all of my trading comes from. When I say things in my tab or on trade floor, like, oh, looking to take a long or a short here, whatever it is. If you zoom out to the daily chart, you will almost guaranteed be able to see what I'm looking at and what is making me make that decision. Then you can start to couple your long time frame analysis with some of the shorter time frame stuff we've talked about. Start using those EMAs, start using VWAP, any sort of intraday support and resistance, as far as pre-market highs, pre-market lows, all of that. None of those are reflected in a daily candle. I get that question a lot, why is there a gap? Well, that's because a daily candle only cares about the New York open to New York close. That's all that it cares about. So we're seeing the open of the day and we're seeing the close of the day, and none of the after hours stuff is included in a daily candle. So when we get a gap down like this, we closed 443, we opened 441 the next day. So that's all the daily candle shows us. So that's when I'll start to go into still long time frame analysis, but look at these 4-hour charts and say, what kind of movement are we having in these after hours, and try to look at some of what we're seeing there. And then, you can still get your pre-market highs and lows from the 4-hour all the way down to the 5-minute. It doesn't matter where you mark them, highest high, lowest low. But always start your day on these longer time frames, just because it'll make your life a bit easier. And so you might have noticed I'm basically giving you my analysis on QQQ tech going into tomorrow, how I'm going to be looking to trade it. I know that we have just a data filled week, but as you can see, uh, nothing's going to change for me. I'm still going to trade these technical levels. If data is coming out, obviously I'm going to tread lightly on positions. But for me, and for I think everybody else, this 440 should really be your line in the sand on QQQ, buying pullbacks all the way to it and attempting to short below it. Always remembering the broader market context. If we zoom out, what is the market doing? The market is going up. So we see that on the daily time frame. If you are trying to short the market, you are going against the trend. There's no there's no reason to fight the trend. There's of course intraday times to short the market, even in uptrends. There's short and long opportunities most every single day. And so trade those opportunities. However, always have the big picture in your mind. And the big picture on tech is that, like, it's a train you do not want to jump in front of right now, until we really start to see some technical breakdowns, giving up some SMAs, giving up some important levels, giving up trends and sustaining below them. Then you can start to look to get short in the market. But for now, keep looking to buy dips. So that's pretty much what I'm watching on QQQ. SPY. We're going to talk about the same things, but I'm doing my analysis a little bit different on this, and I wanted to do these this way. So, the SMAs have been working very, very well on QQQ. Obviously, you can see 20 SMA still working really good on SPY, but one that I've really been liking, and, kind of shout out Tilio for this one, because he's the one, he knew that I used this EMA combo, and he was, said and has started posting charts with it. Look at the 513 combo on the longer time frames. So these are actually EMAs that I have on here. And you can see SPY is riding this thing. I mean, any dip to this 13 EMA has they've just absolutely clobbered it long, so this is what I'm looking at. Same thing, on same sort of analysis, same sort of everything on SPY that I have going on QQQ right now. Obviously the charts look very similar because they're QQQ inspired. Basically the same thing these days. You might want to have your eyes on any sort of upper trend like this. Obviously we hit a really, really nice short. I know a bunch of people hit it with me last week, right off of that trend. You don't want to be long at trends. We can see anytime we get close to this thing, and of course there's news and blah blah blah. It's not a trend line that is sending the market down, but the market does have a pretty uncanny way of releasing news at big levels. It tends to go like that. And so to me, this is what you want to be watching on SPY. There's been no reason to flip overly bearish on SPY right now, because we're just riding these trends. We're just riding these EMAs. Yet again, that 13 was a buy. Even today, the second we broke over this 5 EMA, 513.12, this we're just going to put it on here just for reference. 513, close enough. Look at this. This is the 13 or 5 EMA from the daily time frame. We break above it. We tested it a couple times. You get long. Your stop is just below it, and we're just seeing this from the daily time frame. So, there's our EMA. We can have that line on the chart. Obviously, you want to mark any sort of these major highs we've had recently, all the way up to the all-time high, any sort of these major lows that we've had. And we can see again that the market is, yes, we're pushing up, but look at what we have just overhead. I know everybody wants the market to keep ripping and they keep, everybody screams buy the dip after the dip was purchased and it ran. We're getting up to that point where going into tomorrow, we're pushing towards this all-time high. I'm not saying just pile into shorts here. That would just be stupid, but see how the market plays out. And if you do want to take, a small position size speculative short with stops just over that all-time high, there's no reason to not try. Obviously, we have the trend, next trend test, if it were to come tomorrow, would put us up there 520 or whatever. Not saying that happens, but play these targets and play them realistically. And don't, always just try to analyze what is the market telling us? What does the market want to do? Because it's pretty simple when you really start, zoom out, look at these longer time frames. I mean, we know tomorrow that when we come to all-time high, if we come to all-time high, and with like Nvidia and stuff ripping after hours, we just might. People are going to be screaming about piling into calls tomorrow. Really watch the chart, and see, does it look like we're actually going to break all-time high and get that push above it, or are they going to reject us? If we gap up above all-time high, do you really want to be the person buying calls at a trend? Because I don't. So the closer we push up here to this trend, the worse and worse the risk reward is long. Pullbacks, buy them. Big pushes up, short them. If we zoom out and look at the chart again, very, very simple. Any push up towards that trend has been shortable. This one obviously didn't make it all the way. Nice gap up. Any dip backs to it, very, very buyable. Obviously, that 513 EMA combo just ridiculous for us lately. I know that Lambos uses a similar one. He might use the 8 and the 13, 8 and the 20. I don't know if he's in here, but he has another one he's been watching. But this 513 combo is just disgusting. I mean, it's like it's been too easy to trade. You hardly even need levels. You just need to know where those EMAs and those trends are at, and don't be the person chasing calls at the top and puts at the bottom. For some reason, people always think, one nice red day and market's going down, and that the people who are saying that are for sure the ones who don't spend any time on the longer time frame charts. They're hyper focused on the 5 minute and the 15 minute and things like that. And if the only information that you have on the market is this, then like I get it, like you want to be short when you're seeing this kind of thing. Let's get that trend out of there. No helpful information. If you have 1 day's worth of info and you see this and you see a bounce that was, nice big bounce up that was rejected right where it should, then I get it. Maybe you want to be short. However, the second you zoom out and you see this day right here, you're like, well, there's only $2 more to the trend. Why would I want to be short there? There's no reason to be short there. So don't be that person that's, buying puts at the bottom and buying calls at the top. Always zoom out on the longer time frame, because you will have no idea if we're at the top or if we're at the bottom without looking at a daily time frame, a weekly time frame, those kinds of things. As all of you know, I preach ranges. I preach real market statistics. One of them that I tell you all the time, 80% of breakouts fail. So that means supports, that means resistances, that means EMAs, that means all of that. So if you are seeing these things and it's only the first or second time something's been tested, you want to start saying, oh, that's a double top, that's a double bottom. You don't want to think that it's going to break out. Tesla's been a prime example of one. Everybody has been trying to catch the bottom on Tesla, and two people have hit that trade successfully. And it ended up not being the bottom. And as no surprise to anyone, the people who hit those were Shark and Tilio. People have been chasing the Tesla trade when there's a million different things to trade that are trading much better than it. So don't try to be the top and bottom hunter. Just trade what's on your chart, and keep your feelings out of it. And really the most descriptive place that you can find is going to be that daily time frame. Oh, wow. Nice chat. I see a question. What data comes out tomorrow, and is it before open? I don't think so. I think we only have like some oil data and then a bond auction. I'm looking 1 second. Yep, oil inventories before market opens, it looks like. Maybe. I never know what time these are, 10:97. Maybe an hour after market opens. And then we got a bond auction again in the afternoon. Well, depending where your time frame is. And so that's all the news we got for tomorrow. But then we got PPI the next day or something. And yeah, we got all kinds of things. Oh, yeah, there you go. Lambos 8 and 13, 21 and 48. Yep. And I mean, this 13, even if this is just the one you want to run, great. I have the 5, like Lambo said, we can even switch it up and look at it. And this is what I want to encourage is people, and for this last, well, I got a little bit more, but for like the last 20 minutes or so, we're going to talk about, yeah, look at that. The 8 is even, even nicer. Buy these dips down here, and you know where your stop is. If you're long in the purple one, your stop's below the blue one, pretty cut and dry, and so trade these things, find what you like. Like I said, trade what you like. I have the combos that I like, the crossover ones that I like to trade. Some of those just longer, some of the longer time frame EMAs. Another one I love is this 12 and 50. Obviously 12 doing almost the exact same thing as the 13 because they're almost the exact same thing. And then when you look at that 50 EMA, we'll go back and touch it eventually, but this is extremely bullish when you're on the time frame or a long time frame and you see a big separation like this. When you're seeing bouncies, things like this, that's saying the market's not ready to break down. Obviously this was a 10% pullback top to bottom, give or take. But when you're seeing this kind of stuff, the market's not ready to break down. When you're just seeing strong up, this is just some profit taking consolidation sentiment, nonsense. Oh, there you go, Lambos, you posted it. And so to me, that's, those are going to be the most important things that you can look for on any sort of time frame. Then the final thing that I kind of wanted to touch on in here is the weekly charts. Nobody talks about them really other than me. Tilio will post weekly charts in the newsletter on occasion to really give you that big picture thing, the big picture view. And so what you want to look at, you can obviously find very, very important levels, things like this. When you have we've had some rejections here and the breakout above this is big, couple retests back down towards it. You want to take note of a level like that. Obviously, previous all-time highs that led into the, 10-month bear market that we had. You want to take note of that. They're very easily identifiable on a chart. However, these levels aren't going to come into play super often. And if they do, then you know that they are going to matter. So always take advantage of a weekly time frame chart because they'll give you really good information. They will show you where really strong levels are. If you look at, we can even look at some of these other ones. These are probably going to be a little wild. Look at you can look at anything on a weekly time frame and say do I want to be the person long Tesla at 200? No, I don't. We've seen it's an issue. Even when we get above it, sure, you can try to buy the dips back to it. But if we're below 200 or we're anywhere at 200, you don't want to be looking long there. You want to be looking short if we've been trading below it. And so that's easy to identify. Like anybody can slap 200 on the chart on Tesla and say that, hey, I don't want to, be long there. And you can do this on any other chart. I mean, another one, Apple, everybody's trying to catch the bottom on Apple. Let's get I wonder if I got one. So everybody's trying to catch the bottom on Apple. And, to me, there's very few levels on this entire chart that matter. It's basically these three lows right here, extremely easily identifiable. And, today, this week, we finally might have a candle close above it. However, I don't care at all. If this is what our weekly candle ends up forming on Apple, I have no interest in swinging it. I barely even have interest in day trading it because this is a doji on a big old candle. This is perfect inside candle that is closing as a doji. That tells us that, good for the people trying to catch the Apple bottom. Maybe you hammered it last week and you're up nice and awesome, good trade, but when you see this, it's not where you want to be swinging long. We're going to need a big blowout day or a big dump day for Apple to have any sort of interest. And so when we look at when we look at this weekly time frame, we aren't necessarily trying to take trades off of it. Obviously, could you have tried to play this bounce, from these two levels? Sure. Didn't quite get there, 50 cents off or whatever, but plenty close enough to take a stab. But always look at this weekly chart. It has a ton of data per candle while also not being super detailed, which is kind of a weird way to think about it. But we can learn a whole lot more about this candle if we zoom into the daily time frame or we zoom into the 4-hour time frame. We can learn a lot. For what we see here is that Apple opened high, and at one point it was much lower. That's what we see. Apple was down $10 last week, is what we can learn from this candle. Well, we can learn a whole lot more from the daily and the 4-hour, but we want to take notes of major things like this, these major bottoms where the market tried to turn it around. And that's where we want to base our trades around, because they're going to give us the greatest reward for the littlest risk. And so that is how I'm going to analyze anything that people send me. It gets tough on, let's think of a stupid one. Oh, here we go. Probably a stupid weekly chart. This, zero information, completely useless weekly chart. The SMCI chart really does show us, absolutely nothing. So there is, there's a time where, you might want to not use the weekly chart. SMCI, prime example of it. The NVIDIA one, prime example of it. Sure, you can play these weekly highs and lows and base your trades around them, but like all we can gather from this NVIDIA chart is that it's going to the moon, and so you want to make sure that if you are trading the weekly chart, you're actually getting some good information off of it, like that Tesla or like any sort of Tesla trades, any sort of Apple trades, any of those big names. Look at that weekly chart and I'll help you. Things that are just on a moon mission, quite a bit less helpful. You can see we go into the daily time frame and all of a sudden we have some information we can trade around that was not there on that weekly time frame. So with that's what I wanted to say. That's what I want to say as far as long time frame analysis. Just to kind of reiterate everything, keep it really simple. Look for major levels, look for major trends, find an EMA or an SMA combo that whatever stock you're trading is really tracking with, and then base your trades around it. You can decide if a stock is worth trading from these longer time frames. Like we just talked on Apple. That Apple weekly candle has exactly zero interest for me. We print another week of an inside candle, next week, and then I'll have a ton more interest in trading it, and we'll see how this week plays out. Weekly candle hasn't closed yet, so we'll see, but you can look at these kinds of things and say to yourself, is it something I want to be trading? Is it putting in big enough moves to be trading? And trade accordingly. Another one that we can look at, XLE. Here's the XLE weekly chart. This box is from a class. It was consolidating and consolidating and consolidating. And this was a week and a half of consolidation, and then we finally get the breakout and push. And you can see XLE loves to range for extended periods of time before breakouts, breakdowns. This ETF ranges and makes it very easy for us to trade. We know if it's just trading around 86, we got no interest in it. If it comes down here to 85.28, we want to be long. If it came up here to 86.50, we wanted to be short. It was that simple. The second the breakout comes, you look to buy dips down to here with stops below it. Very, very easily identifiable on the daily chart. This one is going to be the final weekly chart we're going to talk about. Again, this was another one we did in class. IWM. I was beating the drum on this. Everybody was trying to get long, saying that the 200 break's going to come, the 200 break's going to come, getting smoked over and over and over again every single time they tried, when they should have been looking at this weekly range. This goes all the way back to 2021, multiple year weekly range on IWM, that we're finally getting a breakout on it. Any of these dips down here, this 202.30, 202 area, obviously paid last week, paid this week. If we go into the daily time frame, any of these dips down near the top, obviously they're getting further and further away now as we push up, even with all these red candles. These are dips to buy. We are finally seeing a 2-year breakout on these things. Of course, these are small caps. And so you do want to be a little bit cautious because they are so rate dependent. The market has been getting ahead of itself multiple times over this last year. We can see, trying to push IWM potentially a little too early. For anybody that doesn't know, the small caps require, they don't require, but they function best when they can take on some debt, and they can't afford to take on debt. So when rates come down, then they can afford to take on more debt because it's easier for them to pay it. And so this one is just that prime example of a weekly chart breakout. Took it a very, very long time, a lot of consolidation, and then now we are finally starting to see some buying above it. Again, if we break back down into it, then I'm perfectly happy to short IWM all the way back down. I don't think it's going back to 162, barring some really horrible news. But we break back into this range, and I start to feel very, very comfortable short. And so this is just such a simple chart. Anybody can do this. Anybody can go to the daily timeframes, weekly timeframes, find some highs and lows, and trade around them. They work very, very well over and over again. You have to think, when you have weekly candles that are like this, we can pinpoint the part where buyers gave up and sellers started winning. We can also pinpoint where sellers gave up and buyers started winning. And so that's why, for me, I'm always substantially more interested in the wicks. They're like substantially more interested in a wick than a body, because that's where the other side gave up. So to me, those are those prices that matter, much more than where a candle opens or closes. Of course, there's some candles that I do pay attention to their open and close, but for the most part, 9 times out of 10, I am much more concerned with where are the wicks, because that is where one side won or lost. Okay, and with that, I think that's everything I got. And so for these last, 15, 20 minutes that we got, I want to, answer any questions, and then maybe check out a couple charts, so we get some really great trade ideas from these lectures sometimes for the people who do want to talk, or, ask questions and all of that. And so let's get to them. Let's see if we got anything. Dude, Lambo's name is cracking me up. That's a good one. Snow. I'm sure that's just a pretty wild weekly chart after the moves it's making. Look at that thing. This is a tricky one. We know they're selling it, but you always want to look left. And so what does the left tell us? That we had some major rejections going on in this area, and we had some nice strong support down here in this area. We're, I don't love an entry anywhere here. You have to, as with all things, I think of the market in terms of ranges almost always. And so, when we're in a range, we've dropped back into this consolidation area. We just ripped through this whole consolidation area. You don't want to be looking long as we get up here to these, 160s, 170, 165, 170 area. Is that plenty, is $5 plenty of room to trade? Yeah, but you have such a high probability of rejecting more than breaking out, that I'm always going to be looking short. Any of these dips, do I necessarily think that snow is ready to shave another 10% off of its value? No, but I also didn't think that snow is going to drop, $80 or whatever in the last 2 weeks, but it did. So, snow weekly chart, very little interest for me in here. You can obviously find some levels off of this weekly chart to trade off. If we zoom into the daily, again, I mean, I'm not looking long on this. I do think that this is a pretty serious overreaction, at least in my opinion, and so, I'm short snow, not technically, but I would be short snow around this 170, 167, 170 area. That's a nice little area to try to be getting short with stops above it. Again, if we sell all the way down to these lows, I don't necessarily think that we're going to another 10% drop. Like I said, you're psycho to be trying to be short down here. There is a little tiny gap fill down here. That'd be a pretty sweet one if we got all the way down to there to catch that, because that would fill quickly. But for me, I'm not ready to dive in long on this. Slightly reduced guidance, and then people just did not like that CEO stepping away. But he didn't even leave. He just is going to the board. But we'll see what plays out with snow. But for now, just a little too wild for me. Oh yeah, Jack, we'll catch you later. That was almost 10 minutes ago. Tesla Weekly, it's just useless. I mean, Tesla's just smoked. I mean, the thing's just smoked, not, you could theoretically be trying to catch one of these longs down here, we have this little range here. Oh, this is daily, my bad, sorry. Well, let's look at that daily again. You can try to play this little range here with shorts below it, shorts up here, obviously, don't try to be the one catching the breakout, try to catch that continued breakdown. But on the weekly, this thing just looks horrible, and people are finally realizing that oh, shocker, Tesla's a scam. It's really interesting to me to note, it is one of the only major names, if not the only major name, that it just failed to break out. It's failed to hold any gains. It got absolutely smoked last year. I mean, we have all of the important names in the market setting all-time highs or being very close to all-time highs, or at least trading very, very strong. Tesla's had you can see it here. Tesla has had way less strong weeks than it's had in weak weeks in the last 2 years. So, I mean, you can try to be the hero. See if it gets down this 152. See if it holds this 163. But I would be looking to these if we have some continued breakdown. That's where I would be looking personally. Not bullish on Tesla. Can't wait for it to rip like $10 tomorrow, but not bullish on Tesla. Yeah, Rudy, let's check it out. Just because I know a really nice one that plays into exactly what we wanted to talk about here. So, oops. It's not the one I wanted. So QQQ, and just because we're using this one, because this was a super real trade that you could have hit today, So we're on the daily time frame. We're gonna clear it. We're on the daily time frame. We see the CPI print in the morning, and we see that we're selling down. Well, we know that our 20 SMA is this 436.75. So we go into the shorter time frame. I guess it's not a perfect retest. But we have attempted break. Oh, here we go. Yeah, this one I like. So this is the bottom of the CPI candle. So this is a very real trade. This is a very real trade that you could have taken. We come down to our 20 SMA. We bounce it. So we know we're already looking long. Right here, we sold under it. So if we're looking at this chart, we'll zoom in a little bit so you can see it. We're gonna do two examples here. So right here, we break down below, we now appear to be a reversing trend with a retest. So our entry is here, 436.98. Our stop is any heavy selling below here, virtually no risk based off that 20 SMA and based off of this. Next one, just because I see it here, we have all of the SMAs right here. And I typically don't use, we could even, I bet you if we do some EMAs, we can get a better one. Give me 1 second. We'll put up maybe some things people use. Here we go. Right here, 9 EMA, 20 EMA, 50 EMA. So this all counts. We break, we retest. Even if you want to wait, this one can be another retest. These don't exactly touch it, all retests. These are all breaks of EMAs with retests back down. So these are all potential trades that you can take. Another one, you can always look at a pre-market high. Back here, we break it. You know, we've sold below it, obviously, you know, nice sell down, but everybody's, you know, there. When the market goes down, for some reason, people always try to look long, and when the market goes up, people always try to look short. But here's a nice example, and this will kind of put every single thing that I teach all together in one. Trend is down, setting lower highs, setting lower lows. Trend is down. We break, and we have our one level here, pre-market high. We break above it, and here's our retest. Even if you don't get that one, here's a close enough, I mean, within cents retest. So this is the type of thing that you always want to look for, you know, because the people who buy the calls here on high IV, they might make a couple bucks, but your entry is better. And so now you will be more in profit here than they are right here. So always wait for that retest. Don't buy the tops of candles like this. Don't short the bottoms of candles like this, you know, look for those breaks. Can we do Google? Yeah, I was gonna avoid talking about it, but it's just been a printer. I'm happy that my price names aren't on there. So Google daily time frame. Obviously, trend, the bane of the existence right now. Even looks like mine got adjusted just a little bit. TOS will do that to you, you know. Trend today, maybe theoretically technical close out of it. I'm not buying it just yet. But if we go into that 4 hour, this was an extremely, and ignore my funny, you know, making fun of critique and toasty. So we look at Google right here. And again, this is just my opinion. We look at Google right here, 4 hour, we got a top, we got another top, we got another top, we got another top. You don't buy calls up here. For how I trade, just to put that disclaimer out there, you do not buy calls up here. You short it, which is personally what I have done the last couple of days. We shorted it here yesterday. We took another reshort on it here yesterday. We shorted it here this morning. And then let's see. Oh yeah, we shorted it here this morning. And then finally on this third test right here, I shorted it again. And at this point, we had enough tests on this trend that I was done shorting it. But when you look at something on a longer time frame like this, to me, this was a double top, you short it. This was a triple top, you short it. This was a quadruple top, you short it. I mean, it's having no success getting over that trend. It's one of the weaker names on the market. I do think we have a breakout coming. Could come tomorrow, could come Thursday based on some good data, you know, but I'm not looking for calls until we get a break, and then I'll start to buy some calls back here on a retest. But that's just what I'm looking at. Could you make the argument that sure, it technically maybe broke out today, I guess. But for me, this is just one of the weaker names around right now. So it's not where I'm jumping in long. This second chart we took here, that one ended up paying real nice though. Me and I wonder if he's in here. Me and Ty hit that one. Thanks, T. I just Javier, good question. What do I consider a break? You know, something like this is a break. You know, we'll just use this chart. Let me get it a little better zoomed. Something like this is a break. In my opinion, for sure. But we see exactly why, you know, this is a prime example. You don't buy the breakout candle. You buy the pullback candle. Do you get stopped out? Yeah, for sure. You know, you do. But you shouldn't be trying to buy this pullback technically, coming back under that trend. But this is a breakout. But when you see something like this and you get the retest, then it becomes a more viable trade. You could even do this one, breakout with the retest here, look to get long. These could even be retests. These could even be retests. Ultimate failure in the end of the day. But to me, you just want a candle closing over it. We can look at MicroStrategy, but again, that's sort of one of those useless. Look at this. You can gain very, very little information from the weekly chart, very, very little information from the daily chart. So on something like this, you really do need to be and I am not recommending anybody trade this because it's just mayhem right now, but you need to be trading these like big 4-hour supports and resistances up here, and this one's just been insane, like, I mean, it's been moving $100 overnight. And so, you know, go over Google. Well, we just did it. Hopefully you liked it. Hopefully, QQQ, big gap at 422 to 434. I have a feeling that oh yeah, this one down here. Yeah, look at that thing. Who cares? We aren't anywhere close to it. I mean, will this get filled eventually? Sure, but but ignore this kind of thing because people always think this, oh, it's gonna break down, it's gonna go into there, but like generally speaking, it's not. People say, oh, gaps always fill. That's not necessarily true. And so sure, we got this gap down here, but it holds very, very little interest for me because this gap was it was the bulls just clobbered it right there, the 10-buck gapper. I hadn't seen one of those in a while. PLTR. Oh, wow, I hadn't looked at it. Well, it hit our level. That's pretty funny. I didn't catch that trade, unfortunately. We talked this on in class, and I said if we get that breakout, I'm long to 27.50. Apparently, we were getting smoked back down. Looks like it gave the re-entry for the short even today. Nah, didn't even have a chance on that. And I wouldn't have felt comfortable swinging short yesterday. God, maybe I would, but that would have been a risky one. That would have been like swing a cheap weekly. But just right back into the zone, if we pull back down to here, granted it's giving up some EMAs, but we pull back down to this 23 area, it's been a bouncy zone. So that's where you want to take a stab. Otherwise, we can start to go visit some of these lows on this thing. This thing is just rife with disappointment. Right on, Rudy. Hope you liked it. Yep, yep. You're welcome, everybody. You're welcome, everybody. On the 4-hour, I wonder if that was about PLTR. Yeah, I mean, that is actually kind of a nice bit of a 4-hour reversal candle right there, but I sure would have liked this close up here. I don't like the big wicks on both ends. I mean, definitely not bullish or bearish on PLTR when it's trading right around this, 24, 25 area. That's just the middle of the range. And as you all know, that's not where I like to enter things at all. Yeah, right on. Thank you so much. And so we're pushing 6 o'clock. If anybody's got to get out of here, thank you so much for being here. Otherwise, I got time for a couple more questions. No problem. We can check out some other charts, look for some potential trades. But if not, is there a trend in the 4-hour on what? I mean, on PLTR? Yes, if that's what you're asking. And it is a pretty dang strong downtrend. Intel. Oh, nice. I got jokes. I mean, I'm sure people are trying to buy this to catch that breakout, but I'm not long Intel here. If we could get breakout here, pull back to here, then I would try Intel. But this thing's a slug, and I mean, it's like, we got a chip company that looks like this. Well, that's just weird, there's something's awry there, but I want the breakout and the retest, and this is just from the previous high, I know there's a lot of people, myself included, that thought, here last week, we might be getting that gap fill, but not in a day. Of course, this is Intel slow mover, but that it might start really trying to make it. Ultimately ended up failing it, but definitely not long Intel right here until we get some confirmed breakout. This one could provide going into the end of the week. Intel contracts on Friday are real fun. Disney. What's that thing up to? Ooh, still wanting it. It's just it's had trouble getting its footing going since that big ol' earnings beat and gap. Still leaning long though. I know that we hit some trades on Disney back here, a couple of that God, that might even oh yeah, that was right after ER. We hit those right back here. Um, uh, Still like it. Honestly, somewhere that I would be long. I think they're finally trying and getting tight on the weekly. I mean, I think we got a nice big move, and it's been putting. Don't get me wrong; these are some big weekly candles for something like Disney. But I think we got a move coming on Disney. I love to see it just coiling like this for God over a month now after earnings. Let's see where it wants to go. Let's go back to that daily. You know, this is of course you got to take note of this. These high to high, and I'd probably do it like this. Yeah, I would be treading light on Disney, but if we can get above there, I would look for that pop to 115 at least to just kind of get above there and try. Um, Check out our bottom trend. I mean, I'm not bearish on Disney, I'll say that. God, a dip biter right here, 110.50. The trend, that top of range, that would be a really great one to hit. XOM, that's one that's I don't trade it. Oh well, we got our range break. I know a lot of people were trying to catch this one getting clobbed. Uh, Prime example of why you don't long the top until you finally get that confirmed breakout. Um, nice breakout going. Let's see. Where's this line up? Yeah, well, not the place to be long though, in my opinion. God, that would have been a sweet one. Nice breakout on it though. Did you catch that? Jay, you get that one? That was a nice move. That was a nice move on it. But rejected right where you would basically expect it to reject. And I know didn't oil sell pretty heavy today? Well, it sold, but it took a nice bounce too. Let's get oil back down to 70, right? Nice, that's a great hit on shares. Empanada, how you doing, my brother? Wow, Boeing. I'll catch that knife down here at 177. What we got on the 4 hour? Huh. What are you seeing on it, Empanada? Are you in something on this? I know you trade Boeing a lot. I think it's just a bad news magnet. I've been saying that for years. Oh, you got puts and open. There you go. Yeah. I mean, yeah, like, with the news that came out, that was pretty much a like guaranteed should be shorted one. Not if I was gonna be looking for calls, I'm looking for him down here. I want to catch this big old double bottom 176. Not saying it goes down there, but this thing just cannot quit getting bad news to save its life. But you double bottom me on something like Boeing at 176, and I'm willing to bet you that thing will put in maybe not a sustained ripper, but it will put in a ripper off of there if I had to guess. So that's where I'd be looking. Even 180, and then like trade accordingly, have that wide stop. If you want to risk it above 180 because you think you might get that volatile bounce off 180, great. However, and this is not like necessarily recommended for everybody, but if you are taking the early entry above 180, because obviously lows are down here. If you're taking the early entry, trying to catch the early bounce on it, then this is the type of trade you go half a position, and then you likely go a little bit out of the money so that if it does pull back this additional $3 or whatever to these lows, then you can add your whole position, trim out once you get above break even, and have a much better average on your remaining contracts to try to catch the move up. But the safe one is going to be wait for it to get down here 177, long it stops below this low, something around there is what I would be looking for personally. Adobe, I haven't looked at it forever. Well, that 200 day, ooh, setting the higher low off the 200 day, that was nice. Flirting with it. It's a trying, but you got to ask yourself, is it a bear flag? I don't trade bear flags personally, but like kind of looks like a weekly bear flag. The confirmation would be hard. it is so valuable that if you could get that 548 break down to, you could probably ride it down to at least these lows and then look for these previous lows. But as far as longs, I wouldn't be long here, and I would be much more comfortable long over this 590 and the 20 SMA. However, then at that point you have, oh, and I think this is a big old gap, isn't it? Obviously filled now. Yeah, this was that gap, which they did end up filling. But the risk of getting along at that 590 is then you're gonna have that weekly 20 and you got 600 right overhead. So weird one to spot, but if I was in a trade on Adobe right now, I would for sure be short stops over like 581, 82, something like that, personally. Yeah, right on Empanada. Okay, well, if that's gonna do it. I appreciate everybody for coming. Great turnout tonight. A little long time frame analysis. If you got any questions, as always, DM me. But you know, start your day out on those daily time frames tomorrow, and kind of build a little bit of bias and see, what do you think? See if it helps you with just your intraday trading. Um, okay, right on, everybody. Thank you all. You guys are all awesome. Thanks for coming. Great turnout tonight. Uh, and we will catch you tomorrow. I don't even know what day of the week it is, but we'll see you on tomorrow, whatever that day is. Yep, you guys all too. Thank you so much. Have a great night. We'll talk to you soon.